We're going to move on to the macros now. We did discuss it on top of the show, but we have seen record high trade deficit in June. June trade deficit has come in at $25.63 billion. It's a jump that you've seen of imports of 50% year on year, and the big culprits are once again crude oil and palm oil. To talk more about this, the cascading impact this record high trade deficit is going to have on the markets, on the bond markets as well, and the currency. We're now being joined by Aditi Nayar of ICRA. Good morning. Thank you so much for being live with us here on ET. My first question, you're seeing the US dollar strengthen. The rupee has been depreciating. When we see this record high trade deficit, first up, what's going to be the impact on Mint Street?
Thank you. Well, certainly the record high trade deficit is something that everybody is going to be watching, whether it's Mint Street or the government. And you mentioned two culprits. I'll add a third, crude oil, edible oils, and coal. So we've seen a big jump in the coal imports as well on a YOY basis. So it's really this pack which has noted the imports very sharply. Large amount of commodity price movement at play over there. On the export side, we're facing a different set of circumstances. We've got global demand which is more cautious. We've got a base effect which is kicking in, so the growth is seeming to be a little bit lower than what it used to be. And the net impact is that we're looking at stronger domestic demand versus external demand, and that is a recipe for the trade deficit to widen.
Okay, so when you also say it's going to have the government worried, now we've of course never seen such a big number for the trade deficit, but from the government's perspective, what kind of policy actions are you expecting?
I think we've already seen a bunch of measures coming from their side. I think it may be prudent to now assess the impact of those, particularly things like the gold related measures, whether they actually have some impact on demand or not. It's hard to do anything when crude oil prices are so high, or when commodity pack is so high and we are net importers. So I think we have to also let the rupee depreciate a little bit so that at least the competitiveness of exports isn't diluted too much. So that's possibly something that as sort of a policy decision, that's as well something as well that we need to let happen now.
What do you believe, Aditi, could be the silver lining going forward in improving, the numbers going forward?
Yeah, I think one clear silver lining is that services exports have been doing very well, and we've seen large services trade surpluses for the last several months. So that is definitely a silver lining that's going to absorb some of the pain which is coming from the merchandise side. But we're still, looking at overall current account deficit of about $100 to $105 billion this year, which is 3% of GDP. And, it's going to be a record high in absolute terms, but at least as a percentage of GDP, we still think it's going to be just about at that threshold of 3%, which is where beyond which things start to get more worrying. And of course, the biggest factor here is going to be the crude oil prices. So if we have a significant pullback in crude oil prices, then things are not going to look quite so grim. But the probability of that doesn't seem to be very high right now.
Okay, fair enough. Thanks very much. Crude oil prices will continue to be the key monitorable, and we've seen the record trade deficit numbers kick in for the month of June. That's Aditi Nayar for you. Let's shift